Not too much happened in the market this week, so this is probably going to be a kind of a short video. Um, but we'll go ahead and go through all the technical analysis that we usually do, which is we'll start by plotting AVWAP-Q, VWAP, volume weighted average price, anchored to the beginning of each quarter. Um, and this is specifically for the S&P 500 index. I use SPY on the daily chart for these analysis because you know, most stocks are going to be following the SPY's movement because that's just the market average of all the stocks that are traded publicly in the S&P 500. So, with that, very easy to read this indicator. Basically, when price is trading above a VWAP-Q, that is bullish. Bulls are in control, buyers are in control. When it's trading below, it's bearish in the short term. Bears are in control. So we've been above AVWAP-Q consistently since April 22nd, and we've stayed above it, far above it, which is a bullish sign. So I've been short-term bullish basically since this huge 10% green bar in April, on April 9th, where we broke above AVWAP-Q. We tested it, bounced, tested it, had a little fake out below with a recovery the very next day, and then off to the races ever since. Um, Most of my community and myself were buying investments basically throughout this dip. Um, Personally, I bought this dip um, when it hit the 100-day moving average. I'll put up the moving averages right here. I bought some here because that has been a really strong support level throughout this bull market. As you can see in April, we hit the 100-day, which is this green line. Um, August 24th, we hit the green line, sold off a little bit below it. September and January 2025. So, we hit the 100-day moving average. I added some to my portfolio. We went below that. 200-day moving average, added some more stocks. And then seeing the breakdown and test and the failure, we were buying stocks up in here as well. And yeah, and at this point, I held about 15% cash left on my portfolio to add just in case the market does end up rolling over into a bear market, which we did not see, and I don't think we're going to see, and I'll explain why. So let's just go back down to basic technical analysis. I'm gonna unfreeze these, and maybe I'll go over to the SPX chart because it's a bit more clean. I mean, for my notes. So simple technical analysis, right, is that you have an uptrend, which is defined as higher highs and higher lows, higher highs, higher lows, and the downtrend is lower highs and lower lows, right? Lower lows, lower highs, right? So how can you spot a trend reversal? When you start breaking below these highs and lows that were set, right? So when this high is making a lower high, and this move down breaks below the previous low, that signifies that now you're making lower highs and lower lows, right? So same thing in the when it reverses the other way. You start breaking above the most recent high, and you holding above that low, making a new lower low, and it continues on. Right? That's basics, right? Basic trend reversals, basic trends. So using that foundation, I'll undo all of this drawing, we can start plotting where these levels are. Here's the all-time high. Here's the previous low before that move to the all-time high, right? I'll draw the wave on top of that. Turn off this magnet, right? You can see the waves, correct? So now we broke below this recent low, made a new low. Came back here, made a lower high. Broke below the second low, made a very low low, and we waved up, waved down, all the way above this recent high. So what is that like? Just based off this, I'm gonna take these drawings, right, and I'm gonna move them off, and just based off that basic technical analysis, let's see how that looks. Damn it. Try that one more time. Bear with me, I don't like editing videos, so hopefully if this doesn't work again, I'm just gonna figure out a different way to do this. There we go. Yeah. What does that look like to you? Right? We broke that, came back and tested it, bounced off so far. This looks like a potential trend reversal. So based off that, just based off this, we have a possibility of having this trend reverse and continuing and resuming an uptrend to going back to the all-time highs, falling back, pulling back to this previous high that we made, and then continuing that uptrend. That is one way on how to read the current price action of the market. I'll head back over to SPY and I'll use the moving averages. So, number 2, the 200-day moving average is an extremely, extremely strong technical indicator. I'll turn off all other moving averages and just focus on that one. When price move is above it, it tends to signal a very strong uptrend. Price is below it signals a strong downtrend. Sometimes we'll have, quick market dips and V rallies below it, like we saw in 2018 and in COVID. 2018 was trade war combined with the raising interest rates, right? And this was COVID. So again, we dropped back below the 200 moving average and we closed above it and we tested it. We tested it and we bounced off it so far. That's 2 indications that the market has bottomed and we're going to go back to all-time highs. The third indication is I talked about in my other videos, and basically I have a few market bottom indicators that I've used over the years, and 2 of them have triggered. I have 3 total. 2 of the 3 have triggered, and I'll just quickly go over them with you. Number 1, which you can find these for free on TradingView, money flow index. This is a bottom indicator right here. Whenever you see MFI close below this lower range of 25 and highlights green, that is a potential bottom indicator. I called the bottom in August 2024. It called the bottom in October 2023. It called one of the bottoms in October 2022, the 22 bear market. It called interim bottom in June 2022 and interim bottom in January 2022. So this one, obviously, there's no perfect indicator. It's not going to find the ultimate bottom, but it finds a market bottom. And those are the times where you want to put on your investor hat and you want to start buying shares in the long term. Guess when we had that indication? April 8th, 2025. Literally almost exactly at the bottom before this huge rally up. So that's another indicator, 3 indicators. I have another one. I'll open it up for you guys over here. I'll hide this. This is simply Williams percent R on the SPX weekly chart. All right, the weekly chart. The first indicator I showed you, the MFI, money flow index, was on the daily chart on SPY. This one is to be used on the SPX, the SP 500, not the ETF, the actual index on the weekly chart. You post Williams percent R. One of them I believe is 52 range. Yep, length of 52. And the other one is a length of 13. When both of these cross below -80 at the same time, that is a potential market bottom indicator. We also had that, and it recovered back into the range at the same time. And that's another indication that this was a correct market bottom. And then they both popped above -20 as well. That's basically like a confirmation that the bottom is in, the drop is over. So I have plenty of technical indicators that show that this is a market bottom. And I'm not even like going over the other ones, like we have Fibonacci, right? If you use a Fibonacci retracement tool, top to bottom, we closed above the 61.8% level, popped above it, held it for more than 5 days. That's also another indicator. What I'm trying to tell you basically is like the market bottom is most likely in. Unless something unexpected happens, the market bottom is in, despite what the news say. All right, the news is important, but it's not the end all be all. There's many different factors that go into technical analysis. And the reason why is usually we as normal people, retail traders and investors, we're going to get the news late. All right. The news we're getting now was probably found by institutions a lot earlier. Right. That's why it always feels like the news is wrong, or that you're always late to a move, or when you buy, the market goes down, when you sell, the market goes up. It's because institutions have millions of dollars and hundreds of people, which their job is to communicate with as many resources as they can to get the latest news possible and bring that news back so they can perform their analysis and forecast for market conditions. That's all it is. So they're not here, they're not manipulating things to make you lose. They're trying to make money. We're just trying to follow them, and the best way to stay up to date with what they're doing is through technical analysis. Fundamental analysis and is very important as well, but I don't use that to predict market movement. Even Warren Buffett doesn't do that. I use fundamental analysis to basically understand the state of the economy and to see what my risks are and position my portfolio to make sure I'm prepared for those kind of risks. For example, the technical analysis could be wrong here, right? It could be wrong and we could have made it enter the bear market. I left 15% cash in my reserves and I reduced my budget to save more money every single month. I told my wife, there could be a recession. Let's cut back right now so we can save money and invest it if the market goes down. All right, that didn't happen, but we have some extra money, 15% cash, and I've been slowly injecting it. When we broke above the 200-day moving average, I also invested into some of my stocks. It wasn't, it was kind of hard. Yeah, it wasn't at the best prices, but it was at a fair price. Prices here were in fair value territory. So now I probably have about, I don't know, 5% cash left, 10% cash. I think about 10% cash left. So I plan on holding that. Um, So that's kind of my read on the market. I think the last really resistance I see is just this like downtrend line that kind of drew, connecting the all-time highs to this recent top we've had, and we kind of hit that again and it acted as resistance. But most likely, I think we're going to like break out of this and go right to the all-time highs in one shot. It's probably going to be a very impulsive move up. This is it's gonna be about 4% move. I'm pretty sure it's gonna be like just like this China tariff news, right? Just like in boom. So get ready for that. Um, the lower the lower chance of happening is that we're going to be failing, right? We're gonna break below this very important recent high that acted as support here, 576 on S&P on the SPY. 576. It's also the confluence of the 200-day and the 100-day moving average. Extremely strong support level. If we break below this, then the odds of a bear market increases, of course, and we're probably going to be consolidating a lot longer. We might not be reaching all-time highs as soon as we thought. We're probably going to be consolidating and trading between these ranges here until more clarity because of the market. If, bad news comes out and then let's just say like China basically says we're no longer interested in trading with the US, X, Y, and Z products. That will cause a bear market and recession. Um, or some news can come out and say, Congress moves forward with their ban on Trump's reciprocal tariffs. That will, boom, cause the market to explode higher. So, no point in predicting. Technical analysis is your tool to get the odds in your favor. The odds right now are showing that we're favoring the market bottom being in, hitting all-time highs, and resuming this uptrend in bull market. That's what the technicals are showing. Fundamentals are painting a more neutral picture. So let's go over some fundamental analysis. Here are the economic events we had this week. Not too much. GDP growth rate was confirmed to be, negative 0.2%. Yeah, it's negative reading and all that, but keep in mind that the net imports last quarter and the first quarter were very large because a lot of companies were front loading the tariffs by importing all the products so they don't have to raise their prices right away. That because GDP is net, I believe it's net imports minus net exports or the other way around, whatever it is, it's the difference between net imports and exports. That surge in imports caused a negative GDP reading. That same, like Atlanta Fed, the same GDP calculator, basically is stating that we're going to see like an above 3% GDP reading next month, which is also going to be a little bit exaggerated because of the change in the imports and exports. So basically, what people have been doing is they are removing the imports that happened and using the average number based on the historical number that US has done, and it showed like a steady 2 to 3% GDP growth, which is probably going to continue next quarter. Um, Personal spending remains, growing at 0.2%. It's not declining just yet. It's kind of flattening out. So labor market strong. Personal income came in higher than expected, which means that people are getting paid more. That could add some inflationary concerns, but probably not too much because damn it, prices are really expensive right now. We need the money. Um, Core PC price index's inflation reading came in just as expected. So all in all, the way I read economic readings is that as long as it acts as expected, as long as the market and the readings are coming in as forecast expect, that is good. The moment it starts behaving unexpectedly, that's when things will be more uncertain and bad, right? So yes, and right now it's expected inflation will increase due to tariffs. There's a 10% global tariffs right now, US placed on all the countries. That is going to cause temporary inflation. The Feds have answered this question, and they said that in 2018, 2016, 2017, when Trump put the tariffs on China, it caused a spike in inflation that was temporary, it was transitory, it came back down to normal levels, blah, blah, blah. So they know what they're doing. Have trust in your government because it's in everybody's best interest that the US, continues growing. No matter what you think about politics, and how you feel about this country, because we all have our valid opinions about it, about the situation. Whatever it is, it's in everyone's best interest that we have a good life here, right? Everyone here wants to have a good life for their children. Everyone here wants to continue having security and safety, including the politicians. So have a little bit of trust with these readings. Um, Next week we have ISM manufacturing PMI, ISM services PMI. Basically, America has a manufacturing economy and a services-based economy. Um, right now, the services-based economy is continue expanding with the forecasted reading above 50. The manufacturing industry is looking to be contracting with a reading below 50. If ISM manufacturing comes in above 50 and it shows that manufacturing is expanding, that'll be bullish, and that will help non-tech stocks basically become a part of this rally, which will increase market breadth, which means that this leg up is more sustainable and is supported by more and more industries joining this recovery. Um, I don't know if we'll get that, but I wouldn't be surprised to see manufacturing start coming in at or above 50 pretty soon. We got job openings number, there's no forecast yet, and the all important unemployment rate next Friday. Oop, let me scroll down. There we go. Unemployment rate forecasted to stay the same at 4.2%. This is very, very important because every single recession was preceded by a spike, a consistent and continuous and sustainable spike in unemployment. I don't mean just a one time comes in at 5% then goes back down to 4.2. I'm talking like 5% next month, 5.5% next month, 6%. And you'll see it around you. You'll hear about people getting laid off and blah, 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 right? So this is very, very important. Sorry, I don't mean blah, blah, that like people losing their jobs. It'd be very scary and very sad. But I'm talking here like logically, analysis based. Um, as long as we see unemployment rate come in as expected, come in steady, come in flat, their chance of recession are very low. Recession, I mean, like Recessions happen because unemployment goes up, people lose their homes, home prices come down, businesses have to they cut down their expenses, they lay people off. Like these things all have to happen hand in hand, right? So the big two factors is people losing their jobs and people losing their homes, right? So unemployment rate needs to go up a lot for that to happen, which I hope it never does anytime soon. I know it has to happen, blah blah business cycle, but things are very tough right now, very expensive. We can't afford a recession. And then number two, how is people need to be not be able to pay their homes and their mortgages. Well, during COVID, they reduced interest rates to basically zero. I know a lot of people, myself included, that was able to get a sub 3% mortgage rate on their homes that were valued before COVID, which is like half the price of homes right now. So it would take a lot, basically, is what I'm trying to say. It would take a lot to see that happen. I thought that was going to happen in 2022. I thought we were going to have a recession in 2020. I mean, they spiked interest rates from 0 to like 7% in 1 year. And regional banks are failing. Um, but we didn't have a recession. I was shocked. I was completely shocked. I mean, everyone I knew was shocked. We were preparing for and expecting a recession, but it didn't happen. So I don't know. Like people in this country are are figuring out how to adapt to these expensive times. And if we couldn't have a recession at that time, we would need a lot, basically. We would need something really unexpected. So just keep that in mind. You can't predict. There's always a risk of recession, always a risk of unexpected news coming out. But don't let that stop you from investing. Investing is not a 6-month thing. Investing is at minimum, you're holding a minimum a stock for 1 year, but you really should be holding it for 5 to 10 years. Most people I know who have grown their wealth so much is because they've held their good stocks for 10 plus years. I mean, I'm on this app called After Hour, which I've been really enjoying. It's a community of stock traders where they can connect their portfolios to become verified. There are people I see like they have like Tesla like a $7 cost basis. They have Disney like at a $5 cost base, whatever, a $40 cost, whatever it is. Microsoft like a $50 cost basis. That was like over 10 years ago, right? Like even more than that. So you have to invest and hold, and you have to invest in the right companies. The right companies that have good balance sheets, they have low debt, increasing cash flow, that can survive recessions, that can survive. You don't want, your portfolio to be so like filled with companies that have a chance of failing. Like you can't afford that, right? Because you're not gonna be able to react fast enough to manage your portfolio like these institutions can. Or you need to focus on investing. This is my opinion, of course. I'm not a financial advisor, but you should try to focus on investing in good companies, low debt. Was one of my favorites. Peter Lynch is one of his favorites too, is low debt. A low debt company is very hard to fail. So low debt, positive operating cash flow, positive free cash flow, operating cash flow, uh, at least the same as its debt or more. You need to have these kind of companies, and lucky for you, I have a free Discord server where I track 30 to 40 of the companies that I believe have great value and that are, you know, secure enough to invest in the long term. These are companies like, obviously, I have about 13, I think 12 to 13 stocks in my portfolio, and all of them are in my valuation database. I have Novo Nordisk, like I have Visa, I have Microsoft, I have Meta. I used to have Eli Lilly. I have Amazon, I have Apple, Salesforce. I have. So basically, like you'll click on a stock, and it'll pop up my valuation analysis. So I'll pull over here. I'll tell you the fair value that I calculate using several methods. I have my fundamentals ratios that I track, PEG ratios that I track, ranking SP 500, technical outlook. And the cool thing about this Discord, what I love about Discord too, is like you can add tags. So you can filter these stocks by their tags. So you can say, I want a stock that is like undervalued right now, and here are the stocks that are undervalued for you. You could say, okay, I want a stock that has a PEGI ratio less than one. Okay, these are stocks with PEGI ratio less than one, et cetera, you know. So I also on this Discord share, I'm a trader as well. I supplement my income with trading, mostly option selling. I share my trades in real time. Every week I show a summary of my trades. This past week was pretty good for me and my community. I post all my trades I have here. Usually most of it is going to be covered calls and cash secured puts because I'm like a wheel trader basically. If you don't know what that is, highly recommend checking it out. It's probably one of the best. If you have a lot of capital, it's one of the best ways to trade with a high win rate. And we have a community here. We have market discussions. I post a daily market analysis for you. And right now I'm doing it for free. I'm really just trying to grow a community. I want people to learn as much as they can. I want to make sure that whatever services I'm offering is like really good and the people really feel it's valuable. And so take advantage of that. Link will be in the description below. And I think I'll end it here. Um, good luck. If you enjoyed this video, please like and subscribe uh, and share it. It would mean a lot to me. If you have any questions, post them in the comments. I will always be happy to answer questions. And if you have any feedback or something you want to see, let me know. So thanks for watching. And yeah, like I said, good luck.